So hello everyone, how are you all? Now we are here to start our new chapter, accounting equation. Now this chapter is a small chapter in which you have to learn very few things. This chapter revolves around only one thing, which says that assets are always equals to liabilities and capital. What is accounting equation? Accounting equation says that assets are always equals to liabilities plus capital. The other name of accounting equation is balance sheet equation. Okay. Now, accounting equation. An accounting equation is a mathematical expression. It is a mathematical expression which always shows that the accounting equation is true when assets are equals to liabilities plus capital. Accounting equation only wants to show you that at each and every transaction assets will be always equals to liabilities plus capital. Now what are liabilities? Outside liabilities. And what is capital? Internal liability. Also known as balance sheet equation, it says that every transaction affects two or more than two items. Two or more than two items. It is based on dual aspect concept of accountancy. It is based on dual aspect concept which I have already taught you in the previous classes. Now the format of accounting equation is very simple. Serial number or the date as the question says, then the particulars, and then the equation assets equals to liabilities plus capital. Now this is a space which we will use to fill the details of the assets and the liabilities and the capital. Let us start the question and end the chapter in this video only. Question will say, prepare accounting equation from the following. Number first, started business with cash 4 lakh, furniture 1 lakh and stock 3 lakh. Now you have started business with three things. So, serial number 1, started business. You have started business with cash 4 lakh rupees and furniture you have started business with 3 items, cash, furniture and stock, which totaled 4, 5, 6, 7, 8 lakh. Therefore, equal to sign and 8 lakh rupees. It simply means assets are always equals to liability plus capital. Now there is no liability but there is a capital. You all know that this is the case in which the owner has bring cash, furniture and stock. Therefore the sum will be called as capital. Now first equation is balanced. In each and every transaction you just have to check that the accounting equations are equal. Now this was the first equation. Let us attempt the second equation. Goods purchased for rupees 1 lakh and 50,000 paid in cash. Okay. So goods purchased. If you have purchased goods, then it is but obvious that goods will increase. But you have paid 50% in cash. Therefore, only 50,000 is paid in cash, which will be deducted. What about the other 50,000? That will be a credit transaction. Therefore, a liability increase with the name of creditors. Creditors are increased with 50,000 because we have purchased goods worth rupees 1 lakh and have given only 50,000 as cash and other 50,000 are on credit. So 1 lakh minus 50,000 equals to 50,000. Here 50,000 is the total. Therefore both the equation are equal. Here the balance is 50,000 and here it is 50,000. Therefore जहां पे कुछ नहीं हुआ 0 लिखे. No effect means 0. Now after first two equations you have to balance the equation. 4 lakh minus 50,000 is 3 lakh 50,000. 1 lakh plus 0 equals to 1 lakh. 3 lakh plus 1 lakh equals to 4 lakh. Total is 4, 5, 6, 7, 8. 8,50,000. Now here 0 plus 50,000 is 50,000 plus 8 lakh plus 0 equals to 8 lakh. Now 8 lakh plus 50,000 is 8,50,000, and here the total is also 8,50,000. Means to say that we are proving again and again that assets are equals to liabilities plus capital. We are following dual aspect concept, which says that the effect can be on two items or two or more items. Okay. Now the third equation. Sold goods costing 50,000 for 60,000. Now you have sold goods of rupees 50,000 for 60,000. Okay. Sale. Simple. Sale. Stock are of 50,000 rupees cost, but you have received cash 60,000 rupees. Okay. You have sold an item costing 50,000 and you have received 60,000. Therefore, 60 minus 50, 10,000. 10,000 rupees of profit will be added in the capital. Furniture, zero effect. Creditors, zero effect. Okay. Now, again a new equation. Now here 3,50,000 plus 60,000 is 4,10,000. 1 lakh plus 0 equals to 1 lakh. 4 lakh minus 50,000 is 3,50,000. Total is 4, 5, 6, 7, 8. 8,60,000. Now here also the total is 8,60,000. Now the fourth transaction. Depreciation charge on furniture 10%. Depreciation. Now depreciation is an expense, non-cash expense, which reduces the value of asset. Now furniture is of rupees 1 lakh. So 10% of 1 lakh is 10,000. Now this is a non-cash expense, but it will reduce the capital of owner because at the end it is an expense. Zero effect on cash, zero effect on stock, zero effect on liabilities. So new equation, 4 lakh 10,000, 1 lakh minus 10,000, 90,000 plus 3 lakh 50,000 equals to 50,000, 8 lakh rupees. Total is 8,50,000 and here the total is 8,50,000. 5 lakh, 6, 7, 8, 8,50,000. Now the fifth transaction is paid for repairs 20,000. 20,000 rupees paid for repairs. It is an expense for the owner. So where there is nothing, zero effect. Okay. Now new equation. 3,90,000. 4,10,000 minus 20,000. 3,90,000 plus 90,000 plus 0, 90,000 plus 3,50,000 plus 0 equals to 3,50,000 equal to 50,000 plus 7,80,000. 8 lakh minus 20,000. Now here the total is 8,30,000. Here also the total is 8,30,000. So here the total of the both sides are equal. Now drawings. Drawings are the personal expenses of the owner, 30,000 rupees. So 30,000 rupees reduced from the cash and 30,000 rupees reduced from the capital. आप बिल्कुल सही समझ रहे हैं कि जो रिपेयर्स के लिए ट्रीटमेंट हुआ वही ड्राइंग्स के लिए हुआ, क्योंकि दोनों के दोनों क्या है, एक्सपेंसेस हैं. तो 3,60,000 प्लस 90,000 प्लस 3,50,000, 50,000, 7,50,000. Now here the total is 8 lakh, and here also the total is 8 lakh. Seventh transaction is interest on capital. Now you need to learn this, that interest on capital is always charged on opening capital. So what was the opening capital? 8 lakh rupees. What was the opening capital? 8 lakh rupees. So 10% of 8 lakh is 80,000 rupees. Now interest on capital is the income of the owner, therefore 80,000 rupees. But on the same time, it is the expense for the firm, therefore firm will pay or the business will pay, therefore 80,000 rupees minus. Yes, it is a special transaction in which 80,000 will be added because it is the income of the owner, and 80,000 rupees will be deducted from the capital only. So zero effect, zero effect, zero effect, zero effect. Technically, the whole equation has a zero effect. 3,60,000, 90,000, 3,50,000, 50,000 and 7,50,000. Next one is interest on drawings. Now, what is the amount of drawings? Drawings is 30,000. Now here the proper information is not given, therefore we will charge drawings for the full year. 5%. 5% of 30,000 is 1,500 rupees. Interest on drawings is an expense for the owner, but it is an income for the business. Therefore, expense, so reduce 1,500, and income, so add 1,500. Yes, it is similar to the above case. Zero effect of the transactions. 0 plus 0 plus 0 equals to 0. Okay. Now 3,60,000 plus 0, 3,60,000 plus 90,000 plus 3,50,000 equals to 50,000 plus 7,50,000. Now the last is commission received rupees 1 lakh. Now it is an income. So it will be added in cash and in capital simultaneously. So the last is commission received 1 lakh rupees, and here 1 lakh rupees as income. Where there is nothing written, 0. Final equation. Now this will be the final equation. 4,60,000 plus 90,000 plus 3,50,000 equals to 50,000 plus 8,50,000. Now the final equation can also be shown as 9 lakh rupees equals to 9 lakh rupees. Now all the important transactions has been discussed in this question only. That's it for the accounting equation. In exam you can find 1 markers relating to each and every transaction individually. For example, what will happen if the depreciation is charged? Then you have to say furniture will be less by 10,000 and the capital will be reduced by 10,000. It is as simple. Now you have to understand one thing also, that this formula can also be used as opening assets equals to opening liability plus opening capital, or closing assets equals to closing liability plus closing capital. So that's it for accounting equation. Thank you, class.